we have seen starting off flared concerns, geopolitical concerns, both North Korea and the US, with the US issuing warnings and North Korea going as far as noting that they're prepared to launch missiles over to Guam. Now, it's a US territory, there's quite a bit of military presence there, so the US are getting very frustrated. There's a lot of friction between both countries. But what does that mean? Well, we're actually observing in the markets flights to safe haven. Now, your yen and the Swiss franc are really holding firm across the board against its counterparts, and that's likely to be the case as long as these headlines continue to dominate the news wire, so do be very aware of that. And we're also seeing gold prices being very well supported. Looking over in the United States, then the dollar was in a path of consolidation that was slightly halted on Thursday as we observed the PPI, so Producer Prices Index, giving us an idea of where inflation is in the United States, and that actually came in negative territory there, a contraction. So what does that mean? Still signs of deflationary pressures for the United States. And what does that mean essentially for the Fed? Well, it does diminish or fade away any potential hopes of a hike before the end of this year, guys. So what we could continue to see as inflation itself, the CPI number, does dictate short-term trends. What we could see is the dollar start to gradually give up its ground that it was trying to consolidate against the rest of its counterparts. So do be very aware of that, guys. Looking over in New Zealand, we did see the RBNZ. Now, they did keep policy unchanged as expected. Wheeler, at his last statement, just one real takeaway, I'd say. He did know that the country could do with a weaker or a lower New Zealand dollar. Now, what reaction did we see? We saw a drop in Kiwi dollar by around 1 cent now. That wasn't a surprise really to me, as I was expecting for him to talk that down, because they are uncomfortable with higher rates of exchange for them, because it's not good for their exports business for the country. And they also noted that monetary policies to remain accommodative for a considerable period of time. So dovish stance there as anticipated, but we did see a bit of a sell-off for New Zealand dollar across the board. And it does look, in terms of Kiwi dollar specifically, it does look exposed to a little bit more downside before we see any stabilisation of prices, and then it decides again where it's going to go. Looking over in the UK, then data continues to be lacklustre. We did observe the manufacturing production coming in flat at 0, in line with analysts' expectations, but still not good enough. And also the trade balance, a larger deficit, over minus £12 billion for the UK, which is not good. So a continued theme of less than impressive data for the UK. In terms of sterling dollar specifically, it is flirting between or at 130.00 at the moment, in and out, or above and below. In terms of what we can expect going forward, likely to remain in a tight range for a considerable period of time, likely to trade between 130 and 132.50 until there's a key bit of indication from either respective central bank on what's going to happen next in terms of monetary policy. So that's it from me. I hope you've had a smashing trading week, and I look forward to bringing you the key events next week. Thank you.